It's good to see you guys again. In today's video, we are going to go over the net investment income tax, also known as the NIIT. Thanks to the bank's higher yield rates being offered to customers and also the inflation, thanks to the Fed, you might need to pay a surtax of 3.8%. How do you know if you are subject to pay this extra tax? I will go over two examples only for single filers, and I will go over who is subject and who is not subject to pay this tax. If you are filing a different status, please email me or hire a tax accountant in your area that can go over your situation. And finally, I will give you some strategics to consider to lower your tax liability. Individuals will owe the tax if they have a net investment income and also have modified adjusted gross incomes over the following thresholds. For married filing jointly, it'll be $250,000. Married filing separate, it'll be $125,000. Single, it'll be $200,000. Head of household with qualifying person be also $200,000. Qualifying widower with dependent child be $250,000. This tax is mostly for higher earners, as you can see from the chart, but what you need to figure out is also affects one-time spikes for reoccurring income. This might affect you even if you earn less, because this tax is looking for income sources that come from anything from interest, dividends, and also capital gains if you sell any types of trades or options. Even though some people, this tax is basically nothing for them to pay because it's only 3.8. It could be eating your profits, especially nowadays with the market. It could be eating your profit from your portfolio if you exercise any realized gains. It's important to know that this NIIT revenue has more than tripled since 2013, from 16 billion to 60 billion. So many Americans are getting hit with this extra tax, and the numbers are clear. So the $1 million question is, what income counts? We first start with cryptocurrency counts, and then all the old school investment types also counts, such as the interest that we talked from before, the dividends, capital gains, rental and royalty income, non-qualifying annuities, income from businesses involved in trading of financial instruments, so any option that you're selling, or also commodities, coffee, rice, any type of commodities in the market now. What income does not count? Wages, unemployment compensation, operating income from a non-passive business, social security benefits, alimony, tax. Some strategies to consider. The best strategy is to contribute to your traditional IRA or 401k. Also, if you have a health saving account, that's also a great way. All of these will help lower your IAG, your adjusted gross income. And the least popular method to lower your IAG is harvesting losses to offset taxable capital gain. This could be really painful, and if it's done incorrectly, will cause bigger losses in the future. Two quick examples for single filers. Single taxpayers with income less than the chart threshold. This single filer has wages of, let's say, $180,000 and $15,000 of dividends and capital gains. This taxpayer modified adjusted gross income is $195,000, which is less than the $200,000 threshold. This taxpayer is not subject to the net investment income tax. So let's do another example. So we have also another single taxpayer with income greater than the threshold. So this taxpayer is a single filer, has $180,000 of wages. The taxpayer also received $90,000 from passive partnership interest, which is considered the net investment income. This single filer modified adjusted gross income is $270,000. The single filer modified adjusted gross income exceeds the threshold for a single taxpayer by $70,000. Taxpayer's net investment income is $90,000. The net investment income tax based on the lesser of the $70,000, this is the amount that the taxpayer modified adjusted gross income exceeds the $200,000 threshold, or the 90,000 taxpayers net investment income. Taxpayer owes NIIT of 2,660. The math is the 70,000 times 3.8, the surf tax. So thank you guys for watching. Hopefully you guys understand. Just be careful with this tax and always remember to keep it simple.